Next up, we are going to hear from Bass Metals and their CEO, Tim McManus. Tim.
Okay. Thanks, Leo, for the introduction, and thanks to 121 for putting on the conference in particular. Alex assisting us with the quantum of interest that we've had. Very happy with our visit here. As Leo mentioned, we are Bass Metals. We're a graphite producer, in stark contrast to a lot of our sectoral peers in Madagascar. We're an extremely interesting juncture of our development. We identified an asset 2 years ago. We've spent the last 2 years rebuilding and recapitalising the asset. We're now at a position where we're 100% owners of the asset. We have zero debt. We have substantial, in the context of our market cap, cash and receivables in the bank for about $6.5 million. We are in direct proximity to positive cash flow at our project. The overall strategy there is to take that operational and financial platform and from there pursue the broader growth potential of the company and realise the true value of the assets which we have on hand. You can see there we're starting at 6,000 tonnes. Crucially, we are already achieving the 94% fixed carbon. Our concentrates are all large flake dominated concentrates as opposed to the smaller flake lithium anode markets. Ironically, the lithium anode concentrates, whilst getting a lot of the attention, actually get the worst price in the graphite complex. We're looking, as I said, at taking this operational and financial platform that we have, moving to 20,000 tonnes of production by 2020. The capex for stage 2 is similar to stage 1, so the economics look extremely compelling to us. We're also looking at expandable graphite now, which I'll get to in a moment. We have a series of extremely compelling exploration assets, including a lithium asset, which has a surface expression, which is extremely encouraging, getting lithium intercepts of 6 and 7.5% at surface, which is a hard rock resource, not a salar. Okay, there we go. Capital market summary. As I said, cash and receivables of over $6 million, zero debt. We are in the process of hitting nameplate capacity at our operating asset in Madagascar, which will see us be a cash flow positive company. Share price at the moment of 3.2 cents, which sees us with a market cap of around $75 million. It's worth pointing out there the balance of the listed options there are worth about $13 million to us. They're the best part of 40% in the money at the moment. So factoring in their exercise, we'd approach the end of the year a circa $100 million company, $20 million in the bank, no debt, growth potential on several platforms. We're starting to get a little bit of interest from analysts. We haven't done a lot of market engagement like my predecessor. We've been focused on getting it to the point that it's at now before widely engaging the market. But Baillieu's, in particular, out of Melbourne, have 7 cents on us versus our current price. Won't spend a lot of time on the board of directors. Rick Anthon there is probably key and probably familiar with a lot of the previous presentation. Rick's the commercial director of Orocobre, which is a $2 billion listed lithium producer on the ASX. So he's been crucial to our development. Very happy to have him there. Myself, Jeff Marvin's based in the States, who's been fantastic. We have existing sales relationships in the States, which Jeff looks after for us. Importantly, we've got an experienced and well-credentialed team on site, which you need. I'll just spend a moment to talk about Tim. Tim, like a lot of good or competent and successful mining executives in Australia, started from the bottom. He was a drill hand in Kalgoorlie, where he's from. He put himself through a Bachelor of Geology, an MBA, has had a series of increasingly senior roles, including head geologist for Xstrata in Queensland. So Tim is the Chief Executive Operator. He's done a fantastic job on site and assembling his team and delivering the project largely on time and totally on budget. You can see here's our project. That's obviously a drone shot, particularly good one. It's very well located. The laser. This is the road. That ridge there is the National Highway. So we're 3 kilometres off the National Highway, 120 kilometres down to the country's main port at Tamatave, 210 kilometres back this way to the capital, Antananarivo. So in an absolute context, let alone an African context, that's a fantastic logistical outcome for us. 40-year mining permits. We are now effectively the owner of the land which we operate on. 20-year landholder agreements will give the land back to the owners at the conclusion of our operations there. You can see there, abundant source of water, which you need for floating graphite. So everything's there, all the portents are in place. And importantly, with stage 2, you can see that a lot of the work has been done for stage 2 and stage 1. All the civil work, all the haul roads, the road to site. And we've done a complete overhaul of the project that we inherited. We put the best part of 60 kilometres of steel into the project. Everything's painted now, everything's guide posted. You do an induction when you get there. It very much feels like an Australian mine site when you go there, which is what we wanted it to be. I said before, we have concentrated on the large flake graphite concentrates. They get a superior pricing. Our resource in situ is about 91% large flake and above, which lends itself to these concentrates. It sits within a saprolitic host unit, so the ore is easily obtainable. Even with the gentle processing we do, it attritions down to 60 to 65% large flake graphite concentrates. We're achieving 75% recovery with the refurbished mine. Very competitive C1 cost. That will fall further with the economies of scale of stage 2. We have offtake in place for all of this year's production, half of the following 2 years with a group out of Europe. See sales and logistics. It's the national highway there that we basically abut. It's quite a large port down at Tamatave. It's had significant investment from predominantly Japanese interests. It takes Cape-sized vessels. It's a very large port. We operated the mine that we inherited up until August last year, so we were selling concentrates into India, Europe, and the USA. As said, the overall strategy, which we've articulated well to the market, I think, but stage 1 is not the end of the journey, it's really the start. It sets the operational and production platform and financial platform to move on to a much larger mine. The capex of stage 2 is comparable to stage 1, notwithstanding we're tripling the volume. Oh, don't like the look of that. You can see there, that's the dryer, so we've already got 12,000 tonnes of drying capacity on site. To stage 2, we simply replicate what we've done there, put another dryer next to it to get us to 24,000 tonnes. We have significant IP in-house now, having successfully commissioned stage 1. We have existing infrastructure, workforce, customer base, so we feel that we're in a pretty strong position to take the company forward. I think the logical growth pathway for us, and whilst it precludes us from presentations with Teslas and Priuses and battery packs, is expandable graphite. There's been a raft of legislation, particularly in China and the EU, over the last 6 to 12 months, legislating that all new buildings having to have expandable graphite products in their framings and fittings. We are already receiving interest from China about expandable graphite. We've had exhaustive metallurgical tests done on our concentrates, which strongly indicate that we'd have an expandable product, which we're very keen and is emerging rapidly as a stage 3 option for Graphmata. Some of the fundamentals that are emerging for expandable graphite have seen the market increase anywhere between 10 and 20 times in China alone over the next 10 years. So naturally for us, that's extremely exciting. I better get a move on here. As I said, the expandable graphite for us is expandability ratio of 500 times, which is extremely rare. You can see here, illustrates perfectly why we wanted to be in the expandable, the refractories markets, much better price, and this is your battery material here. I'll just skip on a bit. We've done a lot of work in the community, which we felt was important. We inherited a pretty tough set of relationships with the locals and the workforce when we came. We've inoculated all the staff for malaria and typhoid and their children. We've set up a hospital on site which has been certified by the government. We treat a lot of the locals there for illness. We put water wells in. We've refurbished the school. Most importantly for us, and it's been very well received by the Madagascans, we've given them all stock in the company. Not enormous amounts of stock, but we don't want to get to the end of the journey and leave them with nothing but an incoming new employer. So they've received that very well naturally, but we're trying to drive a culture of they own part of the mine as well, because in essence they do. It's just a series of buried rocks without the staff. See, that's a picture of some bagged graphite. Here again, it's just a broader picture of the project. One thing we haven't done is drilled extensively at the project. It's been such an overwhelming focus to get to production. There is a lot of graphite there. We feel we're currently drilling at Mahala. We'll go back and drill more at Mayfa Dock, but we want to rapidly materially expand the resource inventory. What I'd like to talk about as well is lithium exploration. As I said, we're getting 5 to 7% at surface, which is extremely rare. I had a background with Altura, who are currently commissioning their project in the Pilbara. They were getting, up to 2% at surface, as was the adjoining Pilbara. Particularly interesting here, this black discoloration is actually tourmaline. This is the lithium here. The lithium, the current commercial grades are 1 to 1.5%. It's a dull lime green. When you get up to the higher grades, it actually becomes pink and transparent. So we're extremely interested in this. We have outcropping mineral units across the tenement package. We've done an extensive field program we're proceeding to drill. Over the next 6 months, we're going to drill anywhere up to 7,500 metres, so we're cautiously optimistic as to what that might deliver. Probably should have had the disclaimer at the start. So that's us. Thank you for your time. As I said, I feel we're in a very good operational and financial position to take the company forward, and we're well worth considering. Again, thanks to One for your hospitality.